Hi, everybody. Welcome to this talk with Gary Brode. My name is Mari Raven, and I'm going to be your hostess tonight. I'm from the community or the website called invested.dk, and invested.dk is one of the largest communities in Denmark for private investors. Today, we also have people joining us from Norway. We've sent out an invitation to our sister site, daytrader.no. And also we have people from Gary's community here. So we're a big bunch of citizens from around the world, and that makes me so happy. So today we're going to hear from Gary from Deep Knowledge Investing, and we're going to hear about 3 winning tips for the market right now. And Gary, I've been talking and talking. Do you want to introduce yourself? And
Yeah, thanks.
welcome to the talk. I'm so happy you're here.
Thanks, Mai. Thanks for having me. We've enjoyed all of our discussions with Invested DK. So glad to have your Norwegian friends on the line as well. And one of the things that we love about your community is I get the best questions from your people. I get more questions, better questions, thought-provoking questions. You really have a great investor community, and I'm so glad to be speaking to you. And so glad that some of you have chosen to join us at Deep Knowledge Investing. We provide actionable investment ideas and timely market commentary. We've been early and predictive on things like inflation, on hedging for higher interest rates, on shorting the market this year. And so I think our subscribers have done really well, and we're so happy to be working with you now.
We are too. We're so honored that you want to spend time with us, and thank you so much for speaking so kindly about our community. We're very happy about that. So I'm trying not to do any tongue twisters here. My native language isn't English, so I hope you'll bear with me. For the guys just joining now, you can ask questions during this talk. If it fits in the talk, I'll ask Gary them. Otherwise, we'll Otherwise, we have time in the end for questions. So, Gary, I've done my introductions. Let's hear what you have for us today.
All right, great, Mai. So where would you like to start? I know we've got questions on oil, on inflation hedges, metals, commodities, stock picks. Where do you think is the best place to start?
Well, let's start with gold, because one of my questions were about the ban, the sanction that's against Russia right now, that they can't export any gold. So I think that's maybe 2 days old, it's most recent.
Yeah.
So for taking something really recent, what are your thoughts about that?
Yeah, so thanks for asking about that. That information came out, I think, last Saturday. We had a post up on our blog on Saturday. If any of you want more detail on this in writing, it's deepknowledgeinvesting.com. If you click on the research tab, that post is not paywalled. But the key issue here is the United States, I think, has good intentions in sanctioning Russia. We believe that the Ukrainian people should be free and independent and should be able to choose their own leaders and chart their own course. If I had my way, the Russians would leave Ukraine right now, and that would be the end of it. So I think we have good intentions here, and the United States has attempted to sanction Russia, and we've kindly been joined by our friends and allies in Europe, also with the same good intentions. The problem is that the sanctions have not been well designed. So I think we were trying to do a good thing. I think our European friends and allies were trying to do a good thing, but we've designed the sanctions poorly. So the problem is that the news on Saturday is that we're going to ban, as you said, exports or sale of Russian gold. The issue is there's no such thing as Russian gold. There's simply gold. Okay. And most of the world has not joined us in these sanctions, including some very large countries like China, India, Brazil. These are countries with a very substantial amount of GDP. And every country on the planet uses oil Fertilizer is very important. Russia exports food. So there are things that, that the Russians have that other people will want, including gold. There are roughly 150 countries in the world who have not joined us in these sanctions. And so what was announced is the Russians won't be allowed to export gold. And
Mm.
that is factually incorrect. What it means is that a very small number of countries, including the United States and the European Union and NATO, will not be buying Russian gold. But that doesn't stop the Russians from selling their gold to 150 other countries who can then import it, melt it, recast it, and put another stamp on it, at which point it ceases to become Russian gold and is simply gold.
Mm. Yeah. Okay, but so I know that one of your ways of hedging was, and we talked a little before this webinar, was actually gold and silver. And I've done several talks where we both had a guy who has an investment firm where you can buy gold, and we have several people um, saying that gold is a really good way of hedging right now. So what's your take on that?
Yeah, we agree. We've
Mm.
been telling people since last November that
Yeah.
inflation is a gigantic problem. I don't know exactly what they were saying in Europe, but our chairman of the Federal Reserve, Jerome Powell, kept referring to inflation as transitory, which
Mm.
is a fancy word for temporary. It is a huge problem. It's not transitory. It's not temporary. We identified that. The real issue is that and I don't know what the statistic is for Europe or for the euro, but in the United States, 80% of all dollar supply has been created in the last 2 years. And that's a huge problem. The
Mm.
United States Federal Reserve was printing $6 trillion at a time with the push of a button. And so there was this huge increase in money supply that wasn't accompanied by an increase in GDP, an increase in production, an increase of creation or mining of precious metals or commodities or anything that has value. The Federal Reserve just decided, hey, guess what? Today we have 6 trillion more.
Mm.
And that went on for a couple of years. And so anytime you have what we had here, which is a gigantic increase in the money supply accompanied by a decrease in economic activity. Remember all the COVID shutdowns that everybody
Mm.
had when no one was working and people were
Yeah.
sheltering at home? Well, what you end up with is more dollars, or in your case, more euros, chasing fewer goods. And
Mm.
you have inflation. And so the thing that is really important about gold, and I was actually just reading a book called The Bitcoin Standard, and I'm going to mispronounce the name. I think it's Seyfried Amos, and please forgive me, I've just mispronounced his name. But he talks about the flow to stock ratio, which sounds really fancy, but it's actually very simple.
Yeah.
There's a large amount of gold supply that exists in the world. And the amount that can be produced in any given year is only, a couple percent of that. So unlike the US dollar or the euro, where a central bank can just create a huge increase, you can't have a huge increase in the amount of gold in the world. Gold has been used as money for thousands of years. It's been used
Mm.
as money throughout the entire world. It can't be created from other substances, or at least not economically. And you have mining that's maybe 1.5%, 2% of the stock every year. And so you don't have large increases in the supply. And that's why gold is a really good hedge for inflation as dollars or euros become worth less. And, there's been a lot of talk in the last few months about how the dollar is very strong. And I'm sure
Mm.
you guys have read that and you're aware of that. And
Yeah.
here's the issue I have with that analysis. It's technically true if you're a foreign exchange trader. So if you're trading foreign exchange and earlier this year you had bought the dollar and shorted the euro, or the pound sterling or the Canadian dollar, you'd be doing
Mm.
really well. But I would just ask you, how many Americans do you think want to own euros? We don't. People want to own things like food,
Mm,
housing, fuel. And by
mm.
the way, it's the same thing in Europe. So if you are living in Europe, you don't want to buy dollars, you want to buy food and housing and fuel. And let me ask you, has the cost of those things, of the price of those things in Denmark gone up?
There, our inflation is high, and I saw your inflation was also the highest in many years. So yeah, the prices of those goods and commodities, they've gone up, and your inflation is high as well, right?
Yes, and
Yeah.
our inflation is understated. I
Mm,
don't know how Europe is keeping track, but
mm,
if we accounted for inflation in the way that we did back in the late 70s, early 80s, which was the last time inflation was
mm.
this high, I think the real inflation number is double the current rate. I think
Yeah.
15, 16% is the
Oh,
real number, which is huge.
why do you think that?
Well, so I'll point to a
Mm,
couple of things.
mm,
The most important is if you go back to the late 70s, early 80s, the United States, when we calculated inflation, went with the actual cost of housing. They call it shelter. It's 1/3 of the index.
mm,
And the actual cost of housing in the United States the last couple of years has been up in the neighborhood of 20%. And there are all kinds of indexes, things like Zillow, the Case-Shiller index. There are all kinds of rental indexes that show the cost of housing is up about 20%.
mm,
And back in the late 90s, I want to say 1998, the US Bureau of Labor Statistics changed the shelter component of the calculation to be what they call owner's equivalent rent, which is they went to homeowners and they said, if you were to rent out your house, how much money could you get for it? And because people don't know and they don't typically put their house on the market, and they'd sort of pick the same number they used last year. And so if
mm,
you look at those charts, the chart of actual housing costs looks like this. It goes up a huge amount, and the owner's equivalent rent is very, very flat. And so there's a gigantic difference between them, and that's 1/3 of the index. A second place where I know they're fooling around with the numbers is food inflation. They've been trying to tell us
okay.
for months that food inflation was 8% or 10%. Has anybody been in the supermarket in the last year? Tell me your food prices are only up 10%.
It differs on different foods, but I think butter was up 20%.
Right.
And butter is a pretty essential thing, but it differs.
Right. So if you
Yeah.
take a look, there's a United Nations um, index that
Mm,
tracks world food prices, and that's up by roughly 1/3.
mm,
So Americans tend to eat a very high protein, expensive diet. We eat a lot of beef, chicken, pork, fish. We do have, fresh vegetables. The things that we eat here tend to be expensive. So is it reasonable to assume that in food inflation here, is only 1/3 to 1/4 of what it is in the rest of the world? I just don't believe that.
mm.
The price of beef has doubled. We had bad cases of bird flu here, the H1N1. We've killed, I think it's 15 or 20 million chickens.
Oh,
We've
okay.
killed millions of turkeys. The price of eggs, I think, has tripled.
Mm,
Um, and so there are huge food shortages, and it's going to get worse.
mm,
So I just don't believe that number. I think if you start adjusting for real inflation and what people are really experiencing, I think the loss of purchasing power of the dollar in the last year has been about 15,
mm.
16%. I would be shocked if it were very different with the euro, but you guys can tell me, um, maybe your community has a view on that. I'd be interested in it.
Mm. Yeah, you're welcome to bring your views in, or if you have any questions, of course. So what you're saying, Gary, is it that you don't believe that the dollar will keep having a strong position when it comes to forex trading?
No, I think there are people who are experienced foreign exchange
Mm,
traders,
mm,
and they'd be the ones to talk to on that. For
mm,
the people listening,
mm.
I don't have a point of view on whether the dollar should trade stronger or weaker against the euro or the yen or the Canadian dollar or the pound sterling or anything that goes into those indexes.
Mm-mm.
That's really not my area of expertise. My opinion is that the dollar is decreasing in value against the kinds of things that we want to buy, right?
Mm.
So I don't want to buy euros. Most Americans don't want to buy euros. What we want to buy are things like cars and housing and furniture, clothing, and food and fuel are big ones. And I
Mm.
think we're facing a huge loss in purchasing power against those things. And if we were able to buy euros cheaply, but then those euros, as you said, they're not buying as much food or fuel or shelter or
Mm.
clothing, the kinds of things you need, then it's not really helpful. So I think people looking at it in that way, they might be making money as foreign exchange traders, in which case, great, good for them. But we're not looking at it that way, and that's
Mm.
why we're buying things like gold and silver,
Mm.
because the purchasing power of the dollar against goods and services is declining, and that's what I'm worried about.
Yeah. There's a question here, and it takes us a little back to gold. I hope it's okay that I ask
Yeah.
it now. I sensed that you were in the end of what you were talking about, but it's from Ronnie, and he wants to hear. Do you want to give your opinion of Bitcoin versus gold?
Yeah, I think the answer is to own both.
Mm.
Um, Basically, gold is a great hedge against inflation, and it's something that we own now, and we think people should own now, especially if you're worried about the loss of purchasing power of your assets.
Mm.
Bitcoin is actually deflationary.
Mm.
Um, and one of the things that we like about Bitcoin is that it can't be controlled by a state. National actors, state actors don't have control over it. And the reason I say it's deflationary is because right now there are roughly 19 million Bitcoins in existence. There will be a total of 21 million. So the last 2 million will be mined over the next 100 to 150 years. And roughly every 4 years or so, there's an event called the halving. And what that means is that the same amount of effort or work or computing power that goes
Mm.
into mining one Bitcoin gets doubled. The reward that you get for solving the equation to get a Bitcoin gets cut in half. And so, because it takes more effort to mine the incremental Bitcoin, it's actually deflationary. Um, for people who are nervous about cryptocurrencies, we understand that. There are people
Mm.
who say, wait, this is new. We don't know how it'll all work out. That's a totally relevant and understandable concern. I can understand why people wouldn't trust a new form of money. The thing that I would say to those people is take a 50 basis point position, 0.5%, 1%, put it away and forget about it, because it'll work or it won't. If it works, you'll make enough money on that 50 basis point or 1% position that you'll be glad you did. And if it doesn't work, then you'll lose 0.5%.
Mm.
And we never want to lose money, but you're taking a very simple bet on something that, if it works, would work in huge size.
Okay. Okay. Thank you. So it's not either.
It's
It's
both.
it's both. Yeah.
Yeah.
Yeah. And we were also talking. I know one thing we haven't talked about yet, and there's 10 minutes left of the talk, and then we will have the questions. One thing we were talking about was also oil, and in the pre-interview, I asked you, so what oil companies do you see potential in now?
Yeah.
Because I know
So
oil will. I'm sorry. I just
no,
wanted to
go
say,
ahead.
I know
Yeah.
oil was also one of the ways of hedging that you would recommend, right?
Yeah, absolutely. The fact is, energy needs are not decreasing. And so the human race needs a certain amount of energy, and it's really required for economic development. I saw yesterday, and I apologize, I can't remember what country, but the leader of an African country came out and said, hey, you know, you guys want us to use alternatives and renewables. He said, we need to develop our country. He said, we need fossil fuels for that. And, you know, I understand that. They want energy dense material in order to increase the living standards of their people. And no one wants to volunteer to live in a low energy environment. And so the demand for energy is not going down. But the supply of it is a bit of a problem. The situation in Russia has created a problem, as everybody in Europe is well aware. You don't need me to explain that. We also have issues here in the United States where the current administration is very energy unfriendly. They're closing down pipelines. They're not permitting. And, you know, the current president ran for office telling the oil companies that he was going to put them out of business, at which point they said, okay, then we won't ever build another refining plant. And one of the issues that we have here in the United States isn't just a lack of access to the crude oil, it's refining and processing. And by the way, that's one of the big problems in Russia too. Russia didn't run out of oil, they didn't run out of crude, but their ability to process and get processed fuel out of the country has been impaired. So basically you have the supply demand imbalance that's raising prices, and you also have the fact that due to the petrodollar, at least for now, and it's changing, but due to the petrodollar, all oil is priced in dollars. And because of that, the inflation that we talked about is reducing the value of the dollar and increasing the value of fuel against it. Let's go to specific suggestions on that. We like oil companies that are very high quality and already operating permitted wells. And the reason we say that is because due to environmental concerns, it's become, from a government and regulatory point of view, very difficult to get new wells permitted. So we like going with well-run companies that have proven reserves, that they're already drilling, that they're already producing. They don't need additional regulatory help on that. For the people on the call who want a list of names and tickers, here we go. We like EOG, EPD, PCG, and XOM, which is, of course, ExxonMobil. And then one other company that we would suggest that people take a look at. It is not technically an oil company. It's a land leasing company that is closely tied to the oil drilling business, is Texas Pacific Land Trust, TPL. Be aware that it's a complicated company. It's held as a trust, so there may be certain legal issues that people have with that, but there is some, I think, high quality activism on the name. Horizon Kinetics owns a gigantic amount of that stock, and they're agitating for what we believe to be some positive changes. All of that information that I just gave you is publicly available. And because there is somebody who's an employee of Horizon Kinetics on the board of advisors of Deep Knowledge Investing, I prefer not to take questions on that name. The only thing I'll tell you is that everything I know about the company is available publicly, and everything I've just told you is available publicly. I just don't want to discuss it in a way that might look inappropriate, even though we don't have any improper information on the name.
Okay, thank you, Gary. Thank you.
Sure.
Yeah. So we still have time to spare. I think I've asked the question. I just want to give the viewers an opportunity to just ask any questions that you might have. So we've talked about gold, we've talked about silver, we've talked about oil, and also one of the other things we talked about, and that was also a question, but that was Bitcoin versus gold. And you talked a little about mining, but we also talked a bit yesterday about Bitcoin. And what are your opinion about that? And and how to invest in that. Is it mainly Bitcoin, or do you see any potential in other crypto cryptocurrencies? That's the word.
Yes.
Yeah.
Okay. So there are people who are, really great crypto experts, and they spend a lot of time trying to figure out which of the altcoins or small cryptocurrencies will become big. And if they guess right, they make a ton of money. That's not the business that we're in. We're focused on Bitcoin. It's the apex cryptocurrency. It's the one with the largest market cap. It's also being handled differently. Most cryptocurrencies are being managed in a way where they're very focused on commerce. Bitcoin, they're trying to position it, and I think intelligently, as a store of value. They're really trying to make it like digital gold, which is something that we like about it. Owning your own Bitcoin is not that complicated. You can easily find out how to do that and store your own coins, and that's a great way to do it. For those of you who want an easier option, you can actually buy Bitcoin at a discount through the Grayscale Bitcoin Trust. The ticker on that is GBTC. But please be aware that trust, the net asset value should be very close to the value of Bitcoin. There are some fees on that. But the trust at times is traded at a premium and sometimes at a discount. Right now it's trading at a large discount. The Grayscale company is trying to get the trust converted into an ETF, an exchange traded fund. If they do that, the fund will trade at net asset value. That's all a fancy way of saying they're fighting a regulatory battle with the US Securities and Exchange Commission. If they win it, that discount will disappear. And so basically we think that buying Bitcoin through GBTC is, you have two ways to win. One is if the value of Bitcoin goes up. The other is if they win the regulatory battle and are able to convert to an exchange traded fund. So that's why we like it. The one thing that I would tell people is if you're buying that, you need to please have a long time frame, because these things can trade at discounts or premiums for years. So if you're going to buy Bitcoin and hold it, and you're going to buy Bitcoin through that trust and hold it in that way, have a long time frame. This is not a day trading suggestion.
Okay, thank you, Gary. Yeah, I don't have any more questions actually. So I would like, is there anything you would like to share with our community? And also, people, this is your opportunity to just ask questions if you want that. And I just want to say, like, sometimes I look to the side, and it's not because yes, it is because I am distracted. I have a puppy in here, so I just want to make that clear, because sometimes I look to the side, so that's why. There was a question there. It's Ronnie, and his question is: do you have any thoughts on the housing market, Gary?
Yeah, we definitely do, and we've written on this extensively. So what's happened is, the inflation that we talked about, that we identified back in November, has caused the United States Federal Reserve to raise interest rates. And I think you've seen that in Europe as well. The European Central Bank is raising rates too. That, of course, affects mortgage rates. And so over the last few months, we've seen mortgage rates in the United States go from 2 7/8, just under 3%, to right around 6%, a little less, a little more than 6%. And what that's done is it's affected affordability for people. And there were people who were, I mean, this is horrible. There were people who were in the process of building a house. They were in contract for their dream home, and it takes 12 to 18 months to build a house. And while the house was being built, interest rates went up, and these people can no longer afford the mortgage on the home that they were building because the mortgage rates have changed. And so we actually think housing pricing will come down, but affordability won't. And that's a very challenging situation. So I think we did the math on this, and this is on the Deep Knowledge Investing blog. Again, feel free to check it out, but we did the math for people. And I think what we calculated was if you were going to buy a house a year ago for $500,000, $500,000, based on the change in mortgage rates, for your monthly payment to be the same, you now could only pay $375,000 for the house. So imagine that circumstance. You're the seller and the value of your house just went from $500,000 to $375,000. You take in less, but as the buyer, you have the same monthly payment. Now, another way of thinking about that is until housing prices adjust, let's say you were going to move, your job has caused you to move, and now's the time you're going to do it. What that means is for whatever amount of money you have, you get to buy a smaller house, or a house that's further away from where you want to be, or a house that's less nice, or with less land, or you're not going to be able to afford as much. And so I want to point out a really interesting contradiction that we've seen, because recently there were statistics out that in the United States, the average cost of a home purchase has gone up. And so somebody's got to be listening and saying, wait, didn't you just tell us prices were going to come down? Why are they going up? And what's happened is the market is locked up at the low end and the middle of the market. In the low end of the housing market, 80% of transactions have disappeared. We're at 20% of normal transaction volume. The middle of the market, a lot of transactions have dried up as well. And so what that means is that the market is locked up and it's not clearing. And the only transactions that are taking place are at the high end of the market where people are less price sensitive, right? People who can pay $10 million for a house don't really care if they have to pay $10.5 million for a house. It's just not a big deal to them. So we've seen the statistical change, but the market is locked up. And what we expect is that what's going to make the transactions start to happen again is housing prices have to come down. Unfortunately, affordability won't be coming down. The higher interest rates are going to ensure that people are still paying as much as they can pay.
Okay. And what situation will that lead to if that happens?
What it means is we'll have it'll be harder for people to qualify for a mortgage, and it means sellers are going to have to accept lower prices. And we're already starting to see that. I have real estate people on the board of advisors of Deep Knowledge Investing, and I'm already getting phone calls saying, hey, you wanted me to call you when I saw the turn in the market. He said, that's now, we've seen it. And, you know, this is someone, Howard Friedland, who is an expert in the South Florida market, which here is a very popular, very hot market with lots of price increases over the last 2 years. It's a desirable area. And, you know, a couple months ago, they would do an open house and 100 people would be there. And within one day, they'd get 10 offers, all above the asking price. Now that volume has disappeared, and it's much harder to get people to come see a property. They're getting fewer bids overall, and certainly fewer bids above the asking price. Things are starting to get tighter.
Okay, thank you, Gary. We have 5 minutes left, and we have another question here from Ulrich. And his question is, what do you think about weed? Oh, I'm saying it like it's, you know what I mean? That's weed.
Yes.
Really
Yes,
not trying
yes.
to mispronounce here, but the thing you make bread with.
Yes,
Flour
no,
with.
understood. And thank you. First of all, that's a great question. I'm so glad we're focused on it. It's a really important question. And please don't worry about pronouncing it. You don't make me say words in Danish, which would be a disaster. Your language is beautiful, but very hard for me. Some of those words I can't pronounce. I've tried.
Okay.
But yeah, let's talk about wheat, because it's really important. So first of all, Ukraine and Russia are gigantic exporters of grains. They're gigantic exporters of wheat. I'm sure this won't be a surprise to anybody, but huge numbers of Ukrainian farmers either left the country or are busy defending their country. And one of the things we haven't seen, people have said, well, we're not seeing food shortages yet. Right, because the grain that wasn't planted over the last 2 months, that shortage doesn't hit the market right away. That grain is due to be harvested in July, August, and September. And so when that grain that wasn't planted a couple of months ago is then not available to be harvested in August, we're going to see gigantic shortages. The other issue that we have is that Russia, in response to the United States and the European Union and NATO sanctioning them, has said, okay, we won't sell you fertilizer. And the reason that's a big deal is fertilizer is roughly 100% crop yield. So if a certain amount of land yields a certain amount of crop, adding fertilizer will double the amount of crop that you get. Well, without that fertilizer, it's much less affordable for those farmers to plant. And so as a result, not only are crop yields down, but some farmers aren't planting because the cost of diesel has gone up, the cost of fuel has gone up, but diesel in particular has been hard to get and very expensive. And without fertilizer, or with very expensive fertilizer, it's not worth it for them. So we're actually seeing this very unusual circumstance where, despite much higher wheat prices and much higher food prices, fewer acres are being planted. We actually are going to run into a supply shortage into increasing prices. And all of this is going to be, unfortunately, a huge problem. We've already seen food riots in Peru, in Sri Lanka, in Egypt. Hopefully that won't continue, but I think we can expect to see shortages and at a minimum much, much higher prices in Europe and the United States. And so for everyone who's listening to this, just think for a minute past your portfolio and think about what you need for your family. We've been advising our subscribers for months to stock up on food. And if things are tight or you don't have a ton of extra funds for that, even simple things that have a very long shelf life, like rice and beans, it doesn't have to cost you a lot, but now would be a really good time to have extra stores of food, because if there are shortages, people will panic, and we don't want anyone who's part of the deep knowledge investing community or Invested DK or your Norwegian partners, anyone who's listening to this, we don't want you to suffer. So now's a good time to stock up.
Okay, thank you, Gary. We have 2 minutes left, so I think a good thing to do now would be to just sum up, and then we also have an offer I'll get back to the communities. But if we're going to sum up what we've talked about today, and I think we called this talk 3 winner tips for the market right now, but I think you gave us more. So to sum up what you're recommending our communities to do, can we sum it up in? Yeah, thank you.
Yeah, we'll make it quick. Inflation hedges, we like gold, silver, and Bitcoin. If you don't want to hold these things in your home or hold your own crypto keys personally, you can buy the ETFs. You'll pay a little bit in fees. For gold, the ticker is GLD. For silver, the ticker is SLV. For Bitcoin, you can buy the Grayscale Bitcoin Trust. Again, please have a long time frame. GBTC is the ticker. On oil, the tickers again, EOG, EPD, PCG, XOM, and it's technically not an oil company, but we also like TPL. And then another name that we've mentioned in the past, but still like, the stock has gone down, but the fundamental performance has been phenomenal, is Coursera. COUR is the ticker, and we've written a lot on that. While the stock has gone against us because some of its competitors have done poorly, Coursera's continued to perform very well, and in an inflationary environment, they're actually providing services to people and educational credentialing to people at a much lower cost, and so we like businesses like that.
Yeah, and just for the people who don't know, I had to Google Coursera. How do
Yeah,
I pronounce it? But the ticker was COUR, right? So what
yeah.
does the company do?
It's online
Mm,
education. And so everyone just, I'll be really quick with this, Mai.
mm,
Everybody just think for a minute about the last couple of years
mm,
when schools were closed and kids couldn't go to school or universities were closed. Coursera provides online education at the university and graduate school level. You can just go on and take a class in something that interests you, or you can get a full degree or maybe a certificate or advance your career by taking classes, or maybe just some of you are interested in
mm.
literature or statistics or mathematics or negotiation, and you just take a class because we all like learning and that's exciting and fun.
Okay, thank you for clarifying what they do. Thank you, Gary. So our time here is also up. And I just want to mention that Gary has been so kind to offer the Norwegian community and the Danish community 1 month free of premium content from Deep Knowledge Investing. You'll get an email after this talk where you can read more about it. But there's a specific page you can go to, and there's a specific coupon code that you can also use, but you'll get that in an email. And Gary, so very much thank you for joining us once again and giving us some good tips in this crazy market. I think the other day they said that in Denmark there was a drop of 87% in the amount of stocks bought. Like the private investors are scared, although I hear a lot of experts saying like now is the time to buy up. But I think a lot of new investors they're really scared. But I just want to say thanks for coming and giving us good advice and having the overview of this market that is pretty crazy right now.
Thanks, Mai. We really appreciate you having me. We love talking to your community. I told you, I always get the best questions
Mm.
from your people. So glad to be here and talking to you. For everyone who's listening, thanks so much for your time today. And feel free to come check out Deep Knowledge Investing. Come join us for a month. And if it's good for
Mm.
you, then stay. We have a bunch of Danish subscribers, and we love getting their questions and having all of you as part of our community as well. So you're very welcome.
Great. Thank you, everybody. And thank you, Gary. Have a good night. I'll end.